Hello, good morning. My name is Tahir and I'm better known as Striker. What I carry is I carry a specialty when it comes down to intraday trade setups. Look for short-term trades, but that could be good enough for the whole day, uh, 40, 50 pips, 100 pips, and so onwards. I also do a lot of scalps also in between. But what I'm going to do today, in light for FOMC, that's going to come in roughly in about 12 hours from now. I'm going to lay down some sketch where I've already laid down some sketch where I think if it comes down, the price comes down to it, then we'll have a good response out of it. So I'm starting with everybody's favorite euro, and what I have is that basically I'm looking at the zigzag pattern out here where it finally broken out. So go on, carry on, finding a temporary top, and then showing it carries a reversal. So in an ideal setup, it should come down all the way back to where it seems like it says broken up. So about 10 10 10 15 around that vicinity. So looking at from a current point of view, I'm looking at a sketch support that's coming up around 1100 11.5. But what I'm more focused on right now is a break on this wedge. Basically, there's a fake out move above this zone, reversing back, doing another part breakout, getting a retest, and carrying down on the lower side. For that, if I carry on, if I have to negate FOMC, I'll be willing to sell somewhere around 1170 1180. But with FOMC on hand and the way things can spike up and down, then I'll look for impact towards about 1220 1225, basically retest back towards the same trend line in case we get a spike, a fake spike initially towards a higher side. Then and it starts holding around 1220. That would be my cue to go in short, and anticipated initial target would be around 1110. That would be initial break that I would require for the price to go and hit the fuller mark, towards the black trend line. And the black, I painted it black because to me this is a more important trend line, because this is where the breakout occurred. This is where we broke out, and the price has not reached back towards it so far. And again, this is another breakout, made a move, came back, retest, hit back higher, almost came back, went in for another newer high. That was a good breakout strategy, and now it's coming back in again, but at the same time it's showing distinctive head and shoulder view. Can carry that on, has a head, this whole portion as a left, this whole portion as a right shoulder, and then probably this would come down as a from this point of view, this would be a break point, has a neckline. So 1100 probably can come in acting as a neckline, which means this will hold, but it's not going to hold for long. That means swing back, probably back towards 1100 and a change, and then come back, dragging in and hitting back all the way down around here. Regardless of that, regardless of the pattern in play, what we focus on is like I will be much more inclined to see it spike, fake, probably a fake spike higher on the higher side towards 12 10 15 20, whatever the number that comes in. My guess would be around 1220, close around there, and then if it holds, go short for 1100, showing a break, then carry up all the way towards 10 10 15. For the intraday, that would be a good swing point to go and buy, probably for about 60 70 pips. So considering FOMC, I think this would be a good play setup. Other way to do it is probably we lower down here, then probably spike here, and then come down, groove, and then break, head down, and then come back, and then we wait and see after that. Simultaneously, anything higher than that, then the full retrace off from this level still comes down to about 1270 1275 1280. So main resistance is still 1275 1280, right? But if as I said, coming down towards the FOMC, if I see a spike that ends in towards 1215 to 1220ish, right? I'll be more than a willing seller out there, because to gun down probably 200 odd pips from there, my bet would be that it needs to hold this, because this is a fresh breakout. That would make more sense to me. It holds towards it and goes in for a drop. So anything higher than that, that would make it quite sketchy. It would be quite tricky. We might come down here and then might want to go and retrace, but then things can go haywire. So it'll be much more of a trickier trade from here onwards than to go and look back from a whole fuller move on the higher side. So safer and more convenient, or more practical way would be to get a stall out here and then drag down on the lower side. So that's in for the euro, and I'm gonna head down on the pound and see what it is up to. This was done earlier this week, and I was projecting in a possible bear flag, negating this lower spikes and these points. So, and it has already done it. I was hoping it does another. Well, it was a wishful thinking that it does another top out here and then allow us to get a better entry. Apparently it did not happen, but no regrets. I was on pound yen. So anyways, coming down to the point, we have broken down here, and I would expect this move to carry on towards around 4200 zone. So that would be still look for, and I think pound probably can go and give us a short-term buys off from here, but anything lower than that, then pound should go and retrace all the way back towards challenging the lows. So, but the way it carried on and dropped yesterday, I think it's taking most of the burden in. So temporarily around 4200, I suspect that it would go on holding, and might give in temporary buys. Not too much interest on the pound, but again almost the same layout. But anything, in case of big dollar, if dollar starts getting bashed up, and we get a move higher on the pound, then my interest would be look for 44.10, 44.20 to go in short. That's when any retrace coming back towards here, I'll be much more prompted to go in short, and and then try back in. So again, unlike euro, I will require much more going on the pound to go short. At least get a retest back out here and then follow down. But it looks like it's in a hurry, and let's see what Canadian is up to. Canadian has been again showing an distant formation of head and shoulder. Take that as a head, probably adjacent left shoulder, adjacent right shoulder, but that means it can still go and do something around maybe 4200 around. Anyways, coming down to the point, we are bouncing off on a daily support, but if we sketch it out on the 4 hours, okay, this is a prior breakout. So initial move has been finally break most of the people were looking for. It came in, and it came in with a revenge mode. That's been, we've seen how it went down all the way. Anyways, coming back to the point, what I'm looking for the day is that dollar does look like it does shows an intent of it's going to bull out. Even the formation coming in from here, this is good bullish formation on the Canadian dollar on the 4 hours. So it'll be hard fought to get an entry into it, but then anything coming down towards my T5, which is about 37.70ish, or even if I'm aggressive in my mode, then anything towards these lows about 3800, I can look in for buys, and initial target being 40.50, with extended target being for the FOMC coming down for about 4070, 4080ish, and on a short-term scale from 4080ish, I can, one can attempt to go in short for 40, 50 odd pips. So the formation looks like something in this matter, that we should do this move. So anything, a good supporting level would be, move back towards 3770 to get in longs, but then maybe we'll get an extended support coming here. So anything closer to 3800 would be a point into trying for a buy. And hold on. Yeah, I apologize a little bit. I'm doing a session from home, and apparently the background noises, I can feel it. It's just that I didn't tell anybody that I'm on the station, so I apologize in advance. This is again on a 30 minutes prime location. Prime buys in on the pair has already been gone. So, but if anything closest to ours here, that would be again a good indication. You can, again, depending on how the spikes comes in, anything closer towards 3000, that would be attempted. This is one of the pair that I could be very tempted to go and put in a buys out here and carry on for 40-50 with an extended target of 40-70-80ish, 40-70-80ish for the day, which is priority. See, I started looking, basically the glimpses that I'm looking at the market in this view. So this is a channel that I'm taking in, which is again, if you look at it, it eventually will turn out as a bear flag. So for it to be kosher, it still requires a touchdown here. So maybe 40-70ish today, short, then probably get another swing. That would be a good shot to go and carry on to see if it can break under. So it does show that temporarily it can go and do a swing on the higher side, and with the formation of bear flag, look for tops. If it does a 40-70 today, probably 2 days later it wants to go and do 41-10 again. All those zones will be good shorting opportunities in anticipation that we have a bear flag and we're gonna break in and probably go in for a new low. So that would be it for Canadian. I'm gonna jump on some crosses. Okay. Yeah, I'm going to jump on some crosses. I actually have an interest on Euro. We already into those shots. Yeah. The pair is showing that it has found probably a temporary bottom, and then we actually have a shot in play. We already picked up prior to coming in. We already got in. We were looking at this number at 56.58. We already got in. So, but with FOMC, we're not looking for anything fancy, or we're not looking in terms of holding for a while. But then anything closer down towards 56.70, 56.80, we'll be much more happy to cash in and looking somewhere else, looking for a short-term straight setup, and then waiting for FOMC to come in to get in some spike and pick a proper entry up. So this is what we're looking at. Take it, bank it, 20-25 pips, bank it, try to hold the rest for another sketch on. Anyways, what I'm looking at is that initially this is a break point. So any move from here would be best is that if you're going short, then have a stop close by and a reversal mode on. If I look on the 8 hours, all right, so still I still think though the formation has come in that, you know, probably it has bottomed up temporarily, but I think it's going to come back in again. But the main support that I'm looking, main resistance that I'm looking for the day, which implies that, you know, most likely we're going to break it on the higher side. So I feel that on the back of my head that, you know, this trade, the one that's been taken, is only for a very short term, because I'm looking for a move for around 58.40ish, 58.50ish. So that would be a better number coming down into play for FOMC. If you get a spike all the way down there, then, you know, you can do a short setup from there, in anticipation that, you know, the break zone out here, this comes in as a break zone, it might get hold out. So anything towards 58.40ish, 58.50ish, even 58.60ish, because different time frame you can do a little bit variation, and then, you know, with the crosses like euro odd, the way they move, 15-20 pips of band here and there, you know, that's normal. So anything 58.50ish, 58.60ish is a shorting, as of right now, it's a good shorting point, being a break point. So you want to carry on for a whole position, that would be another strike down here on the T1. That's 55.20ish, 55, let's say, you know, roughly a 300 pips band. If 58.50 comes into play and holds, we're looking in for about 300 pips on the short side. This is a good setup. Extended play on the euro odd, of course, comes in up to about 70-75. So as long as 30 minutes does not close higher than this, then, you know, might get a swing towards here. So this is a short-term straight setup, but then, you know, need to play it properly, which requires that get in, get a move, bank some immense stops, and then, you know, try to be as safe as possible, and then see if it can go and carry on a move from here, at least a short target till here. So that's one on the pound, and euro odd, and yeah, holding around towards here, but major breakpoint comes in a bit on the higher side. I think on the if I have to sketch it off from the 8 hours, bring it back here, will come somewhere around here, 58.50ish. It's showing 58.70. Probably 2 hours can show a better glimpse. Actually, I've done it. Yeah, actually 58.70. I'll go with a 2 hours and a 4 hours instead of an 8 hours. So both of them are talking about 58.77. So yeah, we can do roughly about 110, 115 pips on the higher side from here, which means we come down here on the FOMC, we get a shot here, then at least a swing back would get us back on towards at least a retest back out here before it probably wants to go even on the higher side or break back and then go in. So how it's going to get done is like this. So, and anticipating a break on FOMC on the higher side, quick in, hit back towards 58.70ish, 58.80ish, and then at least a retrace back here. From here, either we drop in and then we should go in for the kill, or we go back up here. So it becomes quite simple out here to trade. 58.70ish, probably, you know, not probably, if it comes to it, I'd like to short it out here for retest back towards 57 for about 115 pips. Looks decent. If it starts closing 2 hours back under this trend line, then just not to think too hard and just to go short back in again for a fuller drop down here. So it's quite simple on euro odd, euro Japanese. I know I've got a limited on time, so I'm looking at basically bottoming up on euro Japanese, at least temporarily. You know, it's just that showing me a falling wedge, and we already had one retest on a spike, so it's already pumped up. the retraces so far comes in shallow with a daily candle formation. Long story short, I would be expecting another attempt down towards here, probably, excuse me, double bottom scenario. So anything around this vicinity, which is about 125.50ish, 125.60ish, I would be a willing buyer. In anticipation that we get a minor new low and a probably double bottom scenario for a pushback higher. So a good target would be back somewhere around 129. A fuller target would be about 130.50ish, 130.60ish. So this is another setup that I'm looking at. This is how it's going to come in. This is what we actually did it. We had a shot from here. We did pretty well. Anyways, coming down to the point for the day, again, this is the same thing has been on the daily. It should come down 125.60ish. So 125.50, 125.60ish is a good point to get to see a possible formation of a double bottoms and a pushback on the higher side. If aggressive, again, if aggressive, then probably, yeah, I don't know if we can get a spike this hard. Anyways, if we get a move or anything towards 127.80, 180, actually 180, sorry, 127.90ish, that would be a fuller spike on the FOMC that can come up, because we are on a recent breakout. So anything towards 127.85, 95 would be a good shorting opportunity to see falling out towards 125.60ish, back towards this bottom, get a minor new low, but a bounce back to show that we have a double bottom scenario and we're getting a pushback up. So with FOMC, I'm not gonna go and indulge myself on a short-term trade setup too heavily, but wait for key points to come in. And this is another way to do it, because on a 30 minutes it's been projecting a bear flag which is already broken, and another anticipation of a new bear flag. So maybe it's not going to even going to go and do those moves that I'm looking for on spike up. Maybe it's already ready to go and drop in. So anyways, these are something that can be played upon on breaks. For a pair like that, I would rather wait for FOMC to come in and hit me on the key points to go and act. And just gonna go what pound Canadian is doing. Alright, this is a daily on pound Canadian. That's mean we are playing under a break. So pound Canadian is it's a short basically. If you get a good retrace, you are looking into short anything from 199. Looks like a good point to go and short in, but then let's see how it's showing on other time frames. Alright, on a 4 hours is trying to bottoming up. Actually, it is bottoming up. So yeah, initial, from on here. Right now it would be a good idea to actually buy it for at least towards a move towards 9,900 or around. Would have been better if it coming down on onto support, or it would be better levels to get into, but against the lows, against the current low, maybe low is 97, so probably about against 97.80ish. This is a short-term buy towards or close to around 9,900. So that would be an aggressive. Trade, but showing a bottoming out, at least temporarily. I don't know how it's going to go over the FOMC, but glimpse. This is again, has been playing. This is actually better, aggressive buys, hit back towards 99, maybe all the way to 99.50 and go back short. On FOMC, anything close to 99.50, anything close to 99.50 in a halt, that would be a good sign to go in short and then probably see the breakout. beyond this range. So 99.50 on Canadian will probably come in handy. Canadian does show that it wants to go on the higher side. Pound does show that initially probably is the kind of drop that it has done, it can probably go and hold on towards 4200 level, because if it does not, then I would suspect it's got a lot more falling out. So eventually probably can, but then it will be a good sign if it can go in for some retrace, get a breather, and then come back towards it. So 99.50 here on Canadian, that would interest me. That would definitely interest me. Do a quick on the Swissy. Yeah, Swissy has already played up the max. It's bounced off. My support is, again, this is where it gets tricky. Now, to make things simpler, this shows congestion, and this will ultimately show a lot for the dollar, because right now one of the main trend lines has already come into play, and since Swissy mirrors closely, or it mirrors the dollar, this is a breakout. So FOMC, if it breaks on the higher side, that would imply that dollar is up for gains, and similarly, if it holds on here, it just tells me it's going to be choppy. Things going to get choppy. That's mean this one pair right now, looking at the Swiss franc right here on this formation, and if this has to mirror the dollar, then first attempt re-breakout is very rare. So this should be like this in any normal circumstance. This is one of those setups that that will make you money almost every time. So, but I don't know what to expect over the FOMC, because if it breaks up, that's again an indication that there's a huge gigantic move coming up for the dollar. So that means things can go really haywire for dollar and for the majors, simultaneously. But it'll be all dollar dependent. I'm not going to go too much into the fundamentals and how they're going to come up, and how well the dollar is going to do. But then but what I can do is probably do a sketch out on the dollar itself and see where it is heading. So anything on the break on the higher side, and I think 109.50ish, 109.70ish on the Swiss franc would be coming in. Otherwise, 99.10, 99.20 is a very decent resistance. I don't want to carry a bias, but any normal given circumstances, 99.10, 99.20, I'll be a willing seller on this pattern. I mean, I don't have to think too much about it, but I do have to when it comes down to FOMC or NFP. So it's break dependent. Anything on the higher side, that's mean you'll see dollar getting bought up on each and every on each and every trace. That's how it's gonna go. And this is an initial breakout, this is a current breakout, so the price is right in between the two breakouts, unless can carry on. Yeah, all right. Could be that this is not a main breakout here. The breakout probably it's just a rough sketch right here right now, but somewhere around this vicinity, maybe this is the breakout. Yeah, okay. In that case, this just becomes a step. This cannot be the black. Yeah, that's mean we fell below a wedge, but then this is the main break trend line, and this is a just all right. So that would again maybe somewhere around 1035, 1040, eventually around 1050. So yeah, then the sketch becomes totally different. Then probably here, and then break higher and get something like that, and then definitely a move like this before either it comes back in or goes back on the higher side fully. So yeah, right now 99.10 would be a break point that to consider on the Swiss franc. I'm gonna quickly do on the dollar. Yeah, dollar on the 8 hours was suggesting it has already bottomed out. So this goes. There was a comprehensive dollar layout I'd done over the LinkedIn. So where I mentioned 8 hours was suggesting that it's already been done out, while there was some scope on the daily to still carry on the lower side. But daily is good for looking out, but what I do is mainly I go with 4 hours, 8 hours, and 2 hours. Dollar, of course, I don't trade as a pair, but then its majors are getting done in. So that was a dual support that was coming up on the dollar, and on a range play it still has got some room to go, but with the breakpoint being 12.175. So this is the zone that I'm looking for, that it can probably hit down here, then make a move on the higher side. So for now, at least, depending on how the FOMC comes in, but technically it wants to drive towards 12.170 at least. So we'll find out how it goes over the FOMC, and maybe a little bit on the S&P. Again, this was again done out on the LinkedIn also. S&P has been evident this channel on a bigger turf, and it just made it went back in again. So showing a hold maybe around here. If it starts getting closing on the higher side, might get all the way down here. But yeah, and this is where UJ will come depending on also how it goes, carries on from here. But I think the pressure is building up on the S&P, so another one coming down here likely to break and carry havoc. Anyways, GBP NZD. Yeah, GBP NZD is well, seems not to be in a lot of hurry. Was a good sellout yesterday, so for now, temporarily, I expect to trade. 2.1650 has been support. Should get some kind of movement back on the pair, but apparently, the way it's been structured, it can break on the lower side. So might get another move down here, but break dependent. So for the day, 2.1650ish probably end up giving you a short-term buys, but not to fall in love with those buys unless they start performing well. You can amend stop, take some profits, amend some stop, then you can probably looking for a deeper retrace, probably towards about 2.18 80-90ish. Otherwise, I think it's better that take some and then wrap it up, wait for the break to go in short. So could be, it's inclining on the support. So as we go the support will increase on, but tentatively for the day 2.16, 55.60 would be support on the pair, at least prior to the FOMC. After that, no saying how it's gonna go in. And I'm gonna quickly touch on the Aussie. Aussie, again, this was again over the LinkedIn that I'm looking at 71.75, 71.80 as a supporting zone. But this is what I'm actually looking for. Again, it held out. It showed giving you a two-part wedge. First initial wedge is coming down here towards 70-ish. Break that for the day, I think around 7,000. That would be a good point if Aussie can drag down at least towards here. You know, overall, I'm going to start treating it as a bear flag for now on this formation. But of course, there's a lot of empty movement, so this automatic suggests this is going to be a lot of whipsaw. So down, up. It can carry on for a while. So it does not seem like it's too much in a rush, but I'm looking at basically over the FOMC, maybe a break under 7,100 to drop in about 100 points. It would not make too much sense to go and hit back again on the higher side and still not break it. So I think the upside is pretty much done out. Cannot ignore a spike back towards 71.40ish, 71.50ish. I mean, that can happen on a fake spike up. But I think looking ready for a drop. So 700, 710 would be a good point. And with that, I think I'm going to wrap it up for the session for the day. And once again, I apologize for background noises and everything. I wasn't prepared. Nobody knew out here, and I just gone and done it. And I hope you enjoyed it. And then let's see.